Welcome to the weekend edition of the Fear and Greed Business Headlines, the week that was, a wrap of the biggest stories over the past week. I'm Sean Aylmer. It was a big week for the mining and resources sector, COVID cases, financial markets generally, and of course, host of the 2032 Olympic Games, Brizzy. It was a week in which we found out just how fickle financial markets can be. They tumble and they surge and they tumble and they surge, and sometimes that happens all in the same day. Wall Street fell hard and rose sharply during the week. The debate about inflation and higher interest rates versus a surge in COVID continued. It was earnings season in the US, and some big financial and sporting companies provided better than expected results. Verizon, Nike, United Airlines, Twitter and Coca-Cola all did well. Next week, it will all be about the tech stocks. Same deal on European markets, though there was a twist. Earnings season helped push bourses higher, as did the European Central Bank, saying interest rates in the region would remain low for longer. Of course, post-Brexit, that doesn't affect Britain, and London's FTSE was an underperformer this week. Locally, the S&P ASX 200 hit a new record late in the week. The banks had a good time, so too the miners, though they did come off a bit towards the end. Retailers did well, as did the infrastructure plays. At one point, even the energy companies got a run on. Investors in the local market still believe the lockdowns across the country won't interrupt earnings too much, though the data out of New South Wales is making them nervous. The heat came out of the oil price this week after OPEC and friends agreed to boost the supply of oil by 400,000 barrels a day from next month. This week, the Aussie dollar fell to its lowest level since November last year, before starting a gradual climb back. COVID cases spooked markets earlier in the week, and there was a rush for safe currencies, think US dollar, Swiss franc and Japanese yen. Also, Australia, relative to the rest of the world, doesn't look like lifting interest rates anytime soon. The local unit fell as a result. Coal prices hit $150 a tonne, their highest price in a decade. A heatwave in parts of China pushed up demand, and since they're not buying from Australia, Chinese consumers are paying more for energy. Unusually warm weather in Japan, South Korea and the United States has also added to the pressure on price. High commodity prices helped Australia print a record trade surplus of $13.3 billion last month, after a jump in both exports and imports. That's a big number, $13.3 billion, and comes on the back of higher iron ore and coal prices. But we could well be at the golden point of surpluses. If iron ore prices come off, as they did towards the end of the week, albeit they still remain high, and coal prices fall, which probably will happen given Japan's commitment to reach 30% renewable power by 2025, then Australia's income could fall sharply. Cryptocurrencies had a tough week, tumbling before recovering somewhat. Not helping were comments from Hamish Douglass, co-founder of Magellan. He's kind of the rock star of the funds management industry, if there is such a thing. Mr. Douglas came out hard against cryptocurrencies, saying they were one of the greatest mass delusions in modern history, and it was inevitable cryptos crashed to zero. Notwithstanding the market of the two big ones, Bitcoin and Ethereum, are at the moment worth around $1.5 trillion. And figures show that the superannuation sector had its best result in 24 years, last financial year, with the median growth fund posting an 18% return. The average growth over the past decade is about half that level. In international news, Fed Chair Jerome Powell appeared before Congress and was asked what he thought was the most significant systemic threat to financial stability in the US or globally. Was it China? Perhaps COVID-19? Maybe inflation? No, he said, it was cyber risk. The UK came out of lockdown, notwithstanding the surge in cases. Across Asia, Europe and North America, the number of COVID-19 cases and hospitalisations are rising. A group of developed countries, including the US, UK, Australia and New Zealand, formally attributed the hacking of the Microsoft exchange earlier in the year to people affiliated with the Chinese government, accusing Beijing of protecting hackers. Beijing, not surprisingly, was not impressed. Jeff Bezos, the recently retired founder of Amazon, made it to space, flying, or should that be floating, 105 kilometres above the Earth. Sir Richard Branson did it last week. Forget COVID-ravaged cruise liners, space tourism is the way to go. And of course, the Tokyo Olympics kicked off with some big wins for the football and softball teams, but even better news was that Brisbane was confirmed host of the 2032 Games. Back home, the vaccine rollout continued throughout the week. The Prime Minister apologised for how poorly it's gone, not that he put it in those words exactly, and said pharmacies would soon be able to ramp up jabs. There were new recommendations about broadening the applicability of the Pfizer jab to younger Australians and a push to get people to line up for the AstraZeneca jab. Around 12% of the population is now inoculated. All that's good, but why has it taken so long? Mr Morrison, who has watched his poll numbers waver on the back of the vaccine debacle, needs to take responsibility. Business leaders have offered to step in to help, and the government needs all the help it can get. It was a big week for the economy, though not for good reasons. The lockdowns in New South Wales, Victoria and South Australia will hit growth during the September quarter. In fact, many market economists think the national economy will contract this quarter. Given the surge in COVID cases in New South Wales, there were another 136 cases yesterday and 53 of them were wandering the community while infectious. The lockdown in that state ain't finishing anytime soon. Mr Morrison tried to put the best possible spin on it, saying he'd spoken to the Reserve Bank and all were in agreement that things would be better in the December quarter. Hopefully that's right. But it doesn't do much for the thousands of businesses closed right now, nor for the staff of Building Materials Group Boral, who have been stood down, or the thousands of staff at airlines who face unemployment. Disgraced former New South Wales MPs Eddie Obeid and Ian MacDonald are going back to jail, as is Mr Obeid's son Moses. They were found guilty of conspiring to grant a lucrative coal mining licence in 2009, and this week the judge found that Mr MacDonald had committed a gross departure from his responsibilities as Resources Minister and had denigrated public office. In corporate news, the council assisting the Victorian Royal Commission into Crown Resorts said the gaming giant was unfit to hold on to its Melbourne licence and might not be able to ever get to the point where it would be suitable. In his closing submission, counsel Adrian Finanzio was critical of Chair Helen Coonan and her ability to shepherd in change. He slammed Crown for systemic breaches of the law and highlighted allegations of a $270 million tax fraud and credit card fraud. Ouch. There was then speculation that maybe the merger deal with arch rival The Star was the way to go. But yesterday, the Sydney-based gaming group said it wasn't interested anymore. It took its $12.50 offer off the table. Crown's share price is currently closer to $10. US engineering software group Autodesk dropped its bid for ASX-listed Altium after the two tech companies couldn't agree on price. It came after a bid valuing the company at $5.25 billion was rejected earlier in the week. ANZ unveiled a $1.5 billion share buyback to return capital to shareholders. The banks are awash with money at the moment, about $34 billion in excess capital, according to analysts, and the other three majors are likely to announce capital management initiatives in coming months. Ramsay Health Care's $3.9 billion bid for Spire Healthcare in the UK was dealt a blow after a shareholder vote fell short of the 75% minimum threshold for the deal to go ahead. IAG said coronavirus had caused the insurer to fall into a loss last financial year, and there were plenty of production reports from the miners. Generally, they were pretty good. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest story of the week for the third week running was COVID. 13 million people are currently in lockdown. It's dominating conversations, news sites and workplaces. New South Wales is in all sorts of trouble, and yesterday was declared a national emergency. The outlook for Victoria and South Australia is much better, fortunately. Victorian Premier Daniel Andrews called for a ring of steel around Sydney to stop the spread. Sounds crazy, but it might not be. Get vaccinated, no more needs to be said. The sleeper story of the week came from the world of battery metals. In one 24-hour period, BHP signed a deal with electric vehicle maker Tesla to supply nickel from its mine in Western Australia, and the share prices of the three largest lithium producers, Pilbara Minerals, Orocobre and Galaxy Resources, all jumped 10%. Also, Lynas Rare Earths, the country's largest producer of rare earths, jumped 9%. Metals used in electronics are forecast to be in short supply over the next decade, and companies producing them, particularly when they're not in China, are in big demand. This isn't a short-term trend. It's something investors should start thinking about. On a side note, BHP will sell some of the least carbon-intensive nickel in the world for use in batteries, in Tesla vehicles and storage systems. It's not huge financially, but it fits into Chief Executive Mike Henry's push to embrace future-facing minerals. The deal with Tesla puts the big Australian in the right company to expand into new technologies. That's technologies that are less carbon-intensive. The most remarkable story involved Oil Search, the ASX-listed group operating in Papua New Guinea and Alaska. On Monday, its chief executive, Kieran Wolfe, resigned due to ill health. Well, that's what he said. But the chair of the company said he'd behaved in a manner inconsistent with the standards expected by the board in relation to his management style, whatever that means. The chair is a guy called Rick Lee, and he was asked whether Oil Search had received any takeover offers. No, was the answer. 24 hours later, the chair of Santos came out and said the group had made a merger bid with Oil Search. Looks like Mr. Lee was stretching semantics. That's not something you see from the chair of a listed company very often. By the end of the week, the whole sector was abuzz with chatter. Would Santos buy Oil Search? Would BHP sell its oil and gas assets, as reported by Bloomberg? Was Woodside interested? Running an oil and gas company, which are on the wrong side of the environmental debate, would be a very tough job at the moment. It's remarkable what a difference a week makes in the world of oil and gas. My favourite story of the week was the one about the owners of F45 gyms becoming multi-millionaires after listing the business on the New York Stock Exchange. Marky Mark, aka Mark Wahlberg, is an investor giving the float a bit of glamour. Not that gyms, in my experience, are ever glamorous. Anyway, founder Adam Gilchrist, who has nothing to do with cricket, is now worth about $500 million. Good on him. And that's everything you need to know from the last week. I'm Sean Aylmer. I'll be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then.